currently at 101K and the bears are definitely in control, but do the bulls have a chance to make it back up? Let's find out. Welcome back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice, I'm just reading the charts. Alright guys, it's about 2:30 p.m. Eastern time, and the price of Bitcoin is currently at 101,185. And if we start off here with the weekly chart, we have about 4 days and 5 hours before this candle closes. The last week candle closed above the 50 moving average. We're coming off this wick. Usually when we see a wick like this, I usually tell you guys we come back to eat it. And so far right now, we are getting below the 50 moving average. That's currently at $103.94. You guys already know, if we start closing candles under the 50 moving average, for me, that could be the beginning of the bear market. The stochastics RSI are really getting rejected here. We're really getting deep below this dotted line, so it's not looking good at the moment. We could always reverse back by Sunday, but if we were to close like this right now, it's looking really bad. On the other time frames, the 6-day is really rolling over. It looks like we're going even deeper in the stochastics as well. On the 3-day chart, we're still rolling over. 2-day chart was on the way up, but now it kind of looks like we're also rolling over. Yesterday, the daily chart looked like it was going up. I'm starting to see it rolling over as well. We would have to check back in about 4 hours and 30 minutes to see how this candle closes, but so far right now, yesterday we had a red candle and today we're having another red candle. The 21 moving average is at 107,457. The 200 moving average is at 110,406. These are two levels that we must get above, and right now we're about to get a death cross, and that's when this red line, the 50 moving average, crosses downward the 200 moving average. So that usually means a lot of bearishness. Now I do have this in a bear flag. About 3 days ago we had 2 green candles and we got out of the bear flag, but look, now we got back into the pattern. This bear flag brings us down to about 91K, and we have this overall pattern that already started the measured move of head and shoulder, shoulder, head, shoulder. We already broke the neckline, we're below it, and this also takes us to 91K. So it looks like this bear flag is what's going to help this head and shoulder continue that measured move. Now if we head over to the other time frames, on the 22-hour chart, we see that we're headed down on the stochastics. We got rejected from the 21 moving average here. This is bearish. We take a look at the 8-hour chart, we're still on the way down. We also got rejected by the 21 moving average. On the 4-hour chart, we're on the way up from the bottom on the stochastics, but look, we're starting to roll over. The RSI is also pointing down. We never got above this 80 moving average. We had a wick here. This is almost like a topping tail, and since then we've fallen down, and we got rejected again by the 21 and the 50 moving average. So there's no strength here. As you can see, there's no momentum of it showing that we're going to get above this 200 moving average anytime soon. We could always get a rally up, but unless we get above this 200 moving average with strength, to me, we will still be bearish. On the 1-hour chart, the stochastics are on the way down, but again, we got rejected here. This kind of looks like a head and shoulder pattern itself, and this is just looks like more downside. It looks like we will be heading under 100K. That looks like what's probable. On the 15-minute chart, stochastics are toppy. We're on the way down. You can see right here, this looks like we're making some type of a bear flag, and the measured move to this is a deep measured move because this is a long pole, and if this bear flag were to play out in the 15-minute, this would take us all the way to at least to about 97K. So 97, 98K could be our next stomping ground here. But right now, guys, everything is looking pretty bearish. It looks like we will be going under 100K. Let's see if we could hold the level of 98K. That's where we went down to before, and we've been able to pop up from there. But if we cannot hold 98K, expect 95K. We cannot hold that, expect 91K. If we can't hold 91K, we probably will be getting into the 80s. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.